Good evening, Garage Gang. Yeah, you already know what time it is. It's your boy Avatar John, sitting behind the wheel with the control panel glowing, torque coming straight from Auto Guru AI, real horsepower, not influencer horsepower. And tonight, the track is smoking. Bitcoin kissed a new all-time high, and then bam, hit the brakes. Gold strutting like it's the main character. The Fed just dropped minutes that taste sweet and sour at the same time. Washington? Still asleep at the wheel, steering this circus in neutral. But in AI, it's pure chaos. Machines are learning faster than regulators can type. Data's exploding like nitrous in the engine bay. No calm, no balance, just voltage ripping through the system. And that's not even the wild part. Christian XXX is back in the trenches. And let's just say the casinos aren't the only places flipping cards tonight. You'll want to see what he's cooking. It's loud, fast, and probably illegal in 12 countries. So buckle up, smash that like, hit that follow, and send this to your buddy at work. Yeah, the Robin Hood superstar who thinks buying one share of Tesla makes him Gordon Gekko. Because tonight, Garage Gang, the engines are hot, the data's louder than a supercharger, and we're about to go where CNBC doesn't have clearance. Cue the lights, let's rip. The Fed minutes hit this afternoon, and in classic Fed fashion, they said two things at once. First whisper, we might ease up. Second breath, don't get cute, inflation's still alive. They're trying to be everyone's favorite parent, comforting and terrifying at the same time. Markets heard cuts coming and started revving. Bonds heard inflation risk and tightened their belts. It's policy by poetry, sweet and sour in the same sentence. Translation, the Fed is quietly sliding liquidity back into the system while pretending to look serious about inflation. That's the trick, and the garage sees right through it. Let's start with Japan. The quiet storm that never sleeps. Sanae Takaichi just locked down power and told the world, the Bank of Japan isn't tightening. Not now, not soon. Translation, the yen just became the cheapest fuel on earth again. That's carry trade nitrous. Borrow yen for free, convert to dollars, buy everything with a heartbeat. Bitcoin, gold, AI equities. When the world does it together, the yen doesn't slide. It collapses. Down 3% this week alone. That's not a move, that's a quake. Every hedge fund on the planet knows the math. Easy yen equals hard asset explosion. That's why gold broke 4,000. Bitcoin tore past 124K, and stocks danced like their margin calls got erased. Japan opens the faucet. The world lights a match. The Fed, still holding a garden hose, wondering why the house is on fire. Now, swing south to Argentina. That's not a market. That's a survival simulator. Inflation there is measured in panic, not percentages. The peso's in free fall, rates flirting with the stratosphere, and their new libertarian president is cutting spending like he's filming Mad Max 5. The result? A live demo of what happens when fiat dies. Crypto isn't a trend there, it's a lifeline. Stablecoins as savings accounts, USDT at corner cafes, Bitcoin as retirement plan. That's the beta version of the future. Japan prints the fuel, Argentina shows the fallout, and America pretends it's in control. That's the global chaos circuit. Liquidity in one hemisphere, collapse in the other, and the dollar sitting in the middle looking confused. Most traders think the Fed's tightening. Wrong. They're tightening with one hand and quietly filling the tank with the other. Here's what actually happened. The reverse repo facility, that's the overnight parking lot where money market funds dump spare cash, just got drained of roughly $1.3 trillion. On paper, that looks like the Fed reducing balance sheet liabilities. In practice, it's fresh fuel getting pumped back into the financial bloodstream. That cash leaves the Fed's vault and goes hunting for yield. It floods into money market funds, T-bills, equity options, crypto ETFs, GPU manufacturers, anywhere that still promises movement. It's stimulus wearing a trench coat. Think of it like this. The Fed didn't announce a new QE. They just rerouted liquidity that was idling at a red light, straight into the fast lane. Banks, hedge funds, and corporate treasuries suddenly have oxygen again. And what do they do with it? They buy risk. They buy Bitcoin. They buy gold. They buy the future. That's why you're seeing hard assets blaze higher, while the official policy still says restrictive. This is stealth QE, the Black Ops version of money printing. It keeps Wall Street's lights on without admitting it to Main Street. And here's where it gets reflexive. Every new dollar that hits a GPU order at NVIDIA or a venture round for an AI startup becomes compute power. Compute burns electricity. Electricity drives energy markets. Energy hedges push gold and Bitcoin, and the cycle loops back. Liquidity feeds innovation. Innovation feeds volatility. And volatility is where the garage eats. So when people ask why Bitcoin and gold are ripping while rates are supposedly high, tell them the truth. The Fed didn't step off the gas. It just turned off the headlights. They're flooring it in the dark, pretending to break. That's invisible QE, and it's the quiet roar beneath every chart you're watching right now. While the Fed's pumping stealth fuel into the tank, Bitcoin's cutting supply like a mechanic pulling parts off the shelf. Exchange reserves have fallen to about 2.02 million BTC, a 20% slide in a month. Those coins aren't being sold. They're being locked away in cold storage. That's not trading flow. That's inventory disappearing. Every coin that leaves an exchange is one less in circulation. That's how a supply shock starts. Quietly, then suddenly. Right now, Librarian's dashboard is flashing orange, 48 days out from potential ignition if this pace continues. Liquidity injection on one side, scarcity tightening on the other. That's gasoline meeting a spark. When those two curves intersect, you don't get a pullback, you get a launch. And that, Garage Gang, is what we're gearing up for next. Fuel in the system, supply off the market, the setup is forming, and when the fuse catches, it won't whisper, it'll roar. Now that we know the tank is full of invisible QE, look at what's happening on the other side of the track, Bitcoin supply. Exchange reserves have fallen to roughly 2.02 million BTC, a 20% slide in a month. That isn't just movement, it's migration. Those coins are leaving trading floors and moving into cold storage. They're not for sale anymore. They're gone from circulation. That's how a supply shock builds, quietly at first, then suddenly all at once. Every time a coin disappears from an exchange, available inventory shrinks and pressure builds on price. Meanwhile, ETF demand and long-term holders are siphoning what's left. Librarian's dashboard is glowing orange. The countdown clock is about 48 days out if the outflow pace keeps up. Now, picture the two engines running in parallel. The Fed's stealth liquidity feed, fuel flooding the market, Bitcoin's vanishing float, scarcity tightening the belt. Fuel on one side, shortage on the other. That's not a setup for a slow grind. That's a setup for ignition. When liquidity meets scarcity, markets don't walk, they launch. And that, Garage Gang, is the curve we're entering now. The tires are hot, the RPMs are climbing, and the fuse is hissing. Next up, we talk about the third turbo in this machine, AI, the new driver that's pushing the throttle even harder. While the Fed's been sneaking money back into the system and Bitcoin's tightening its own supply, the third engine is kicking in, AI. If invisible QE is the fuel and Bitcoin is the spark, AI is the driver gripping the wheel and mashing the pedal through the firewall. Every tech giant just dropped an upgrade. Gemini 2.5 from Google. It doesn't just answer questions, it clicks, drags, and trades on its own. XAI, Imagine 0.9 from Musk. Voice to video in 15 seconds flat. Every render chewing through GPUs like candy. Claude Ops from Anthropic, now integrated into IBM's Watson X. Enterprise-grade brains on tap. Each release burns compute, and compute burns power. Every watt that fuels those models gets priced into the same assets we trade. Energy, semis, crypto. AI builds, AI spends, crypto clears. That's the autonomy loop. Liquidity feeding machines that in turn feed markets. You can see it in the flows. Venture capital pouring billions into AI startups, ETF money chasing hardware names, and retail speculators turning meme coins into miniature AI stock options. This isn't a tech trend, it's economic assimilation. The line between capital markets and computation just blurred into one glowing circuit board. Every prompt you send, every render you run, every token minted to pay for compute, it's all part of the same liquidity stream. That's why volatility's climbing even while macro looks calm. The machines are the new traders, and they don't sleep, they don't blink, and they don't wait for Jerome Powell to finish a sentence. So, while the rest of the world's trying to figure out who's in control, the garage already knows. AI took the keys. And the next curve belongs to the ones who can ride that automation wave without getting thrown off. Now that the tank is full of stealth fuel and Bitcoin's cutting its own supply, a third turbine has spooled up, AI. If invisible QE is the fuel and Bitcoin scarcity is the spark, AI is the driver gripping the wheel and pinning the pedal through the firewall. Look around. Gemini 2.5 from Google isn't just a chatbot anymore. It clicks, drags, and executes commands on its own. XAI Imagine 0.9 can turn your voice into video in 15 seconds flat. Claude Ops, now embedded in IBM's Watson X, gives Fortune 500s an autopilot for their data. Each model launch burns compute, compute burns energy, and energy demand prices itself into the same markets that trade Bitcoin, gold, and semis. It's all one circuit now: liquidity, innovation, volatility. Here's the reflex loop in action. The Fed leaks liquidity. That money builds AI infrastructure. AI infrastructure eats power. Power hedges run to gold and BTC. Rising prices create new collateral, more liquidity. That's the autonomy loop, a self-feeding, self-funding ecosystem where every prompt, render, and training run moves capital. You can see it in the numbers. Venture funds are throwing billions at agentic startups. ETF flows are chasing GPU manufacturers like they're gold mines. Retail's buying AI meme coins as if they're startup options. AI doesn't need hype anymore. It is the market. And this is where the garage thrives, on the edge between code and capital. The volatility that everyone else fears, that's our signal. Because when liquidity meets scarcity and AI turns it into motion, that's not a bubble. That's an ignition sequence. So keep your seatbelts tight. Next, we're diving into where that ignition hits the street. The place where liquidity, leverage, and pure adrenaline meet, the trench. All right, Garage Gang, this is it. The moment you've been waiting for. You've heard the macro, you've seen the liquidity, you've felt the AI ignition. Now it's time to go underground. Welcome back to the trench, the most dangerous, most beautiful part of the garage. Before we even start, hear me loud and clear. If you treat these trench plays like a lottery ticket, you will lose your money. This isn't investing. It's bare knuckle speculation. You might as well walk into the Flamingo, drop 500 on black, and hope the roulette wheel likes your smile. If you can't afford to lose it, don't play. If you can't watch the screen, don't enter the trade. This is adrenaline finance. Now, for those of you still here, gear up. You need the right tools or you're just target practice. I'm talking sniper bots like GMGN, OLX, and Axiom, the fastest fingers in the blockchain. You'll need scanners, rug checks, liquidity monitors, and alerts tuned tighter than a drum. Because in the trench, milliseconds separate profit from punishment. Let's set the scene. We're back in Las Vegas. Neon lights flickering off the chrome, live from the Flamingo Casino. The bar's loud, the table's hotter than the data center, and Christian XXX is back in form. The man who can scalp volatility while playing poker with the other hand. Tonight's plays: Masterbot, the AI meme hybrid that refuses to cool off. Market cap, 7.5 million. Liquidity, 684K. Over 7,000 trades in 24 hours. Narrative fuel, bots building bots. It's the retail mirror of the AI revolution. Then there's Trolloween, a seasonal monster. 38,000 trades, 114K liquidity. Clean audit, hype that hasn't even peaked yet. XXX watches the 15-minute compression, waits for the breakout, hits volume confirmation, and strikes like a prize fighter. Tight stops, fast exits, no hesitation. He doesn't marry tokens, he dates them for profit and leaves before the lights come on. Every candle's a hand of blackjack. Hit, hold, fold. That's trench trading. No romance, just rhythm and risk control. If you can't keep your cool when the chart spikes or collapses, the trench will eat you alive. But if you can, it's the most alive you'll ever feel. The pit's humming, the bots are firing, and the liquidity's rolling like dice across the table. This is where chaos becomes clarity, where volatility turns into velocity. And XXX, he's already stacking his next hand while everyone else is still reading the rules. Stay locked, gang, because when the house thinks it's got the edge, that's when the garage hits the jackpot. All right, Garage Gang, it's time for Lulu's teaching lab. She's the heartbeat of the garage. 4 hooves, 1 snout, and a sharper read on market structure than most influencers with 6 screens and 0 discipline. Tonight, we're breaking down what the pros actually saw across the 4 gears of trading. The daily, the 1 hour, the 15-minute, and the 1 minute. Every chart matters because each one tells a different part of the same story. The daily chart, big picture. The daily chart is the map of the battlefield. This is where pros confirm direction before they even think about pressing a button. Right now, Bitcoin, Ethereum, Solana, and Cardano are all trading above their 50-day moving averages. That means the long-term uptrend is still intact. The 200-day moving average sits comfortably below price. The engine's still strong. Volume is cooled, and RSI sits around 60. That's consolidation, not exhaustion. The market is catching its breath. A pro looks at that and says, trend's alive. Wait for the next setup. 1 hour chart, the rhythm. The 1 hour chart is where you start to see the pulse of the market. Bitcoin printed a higher low near 121,200, right on the 100 EMA. Ethereum bounced near 4,420. Solana defended 223, and Cardano dug in around 81 cents. That's buyers stepping up to hold the line. The shorter EMAs, the 21 and 50, started curling upward again. RSI lifted from the 30s into the 50s. That's early accumulation, not noise. A pro sees that and knows a reversal might be forming. The 1 hour isn't confirmation yet. It's the warm-up. When those EMAs begin to fan upward, the daily trend has backup. The 15-minute chart, the setup. The 15-minute chart is where timing becomes everything. This is where Lulu makes her move. She doesn't guess. She waits for proof. Midday, she saw Bitcoin close a 15-minute candle above the 21 EMA with volume ticking higher. That was her signal. Entry near 121,400. Target 122,800. Stop loss tucked just under 121,000. One clean move, one clear plan. Ethereum followed, closing above its short EMAs with RSI pushing past 60. Solana printed a higher low near 223 and reclaims trend. And Cardano broke above its 21 EMA at 82 cents. The 15-minute chart gives confirmation before the 1 hour shows it. That's where pros begin loading. The 1-minute chart, the execution. The 1-minute chart is where execution lives and dies. It's not for prediction, it's for precision. Lulu uses it to fine-tune entries and exits. She waits for micro RSI pullbacks and EMA compression before she moves. She saw the signal. RSI climbed from 35 to 65. Volume spiked and price retested the short EMAs without breaking. That's her green light. She entered with a tight stop and trimmed partial profits at the next resistance. Bitcoin at 122,000, Solana at 225, Ethereum at 4,460, and Cardano at 83 cents. Small wins, consistent control. That's how professionals trade. The indicators, the toolbox. Lulu keeps her setup simple. EMAs for direction and strength. The 21, 50, 100, and 200 tell the story of short and long-term momentum. RSI for momentum shifts. Oversold means prepare for a bounce. Overbought means prepare to trim. Volume for conviction. No volume, no follow-through. Support and resistance for battlefield zones. Those levels are where traders make or lose money. Why all four charts matter? Each time frame is a gear in the same machine. The daily gives direction. The 1 hour sets the rhythm. The 15-minute provides ignition. The 1 minute fires the pistons. Pros build trades from the top down. They don't chase candles or hype. They wait for alignment. When all four gears move in sync, trend, rhythm, signal, and precision, that's the green light. Lulu's takeaway, structure first, speed second. The EMAs are your lanes. RSI is your RPM gauge. Price action is the road ahead. Read it like a driver, not a passenger. Respect your map, trust your rhythm, and always keep your stops tight. By the way, none of this is financial advice. For full trend reports, chart breakdowns, and more from tonight's garage session, check out gurucryptogarage.guru. That's GURUCRYPTOGARAGE.GURU. Stay sharp, trade clean, and as always, let it